Greetings, dear traders. Today we are going to discuss the earnings reports of the leading US companies, rising inflation worldwide, and geopolitical uncertainty. Traders continue to closely monitor news on the key rate changes by central banks. For example, the Bank of Japan has already made its monetary policy decisions. Soon, the Fed and the Reserve Bank of Australia will hold their meetings. Let's talk about the main highlights of the Asian session today. On a Wednesday, the stock market partly recouped its losses after a sharp drop the day before. Of course, the volatility persists amid expectations of a rate increase by the Fed and a slowdown in the global economy. However, optimism returned to Wall Street after the strong earnings report of such market giants as Microsoft and Visa. Besides, nearly 80% of the 176 companies in the S&P 500 have published earnings that topped Wall Street estimates. As a result, the sell-off eased. Only the Nasdaq closed with a slight decline yesterday. In today's Asian session, stock futures climbed higher and the Nasdaq index managed to take the lead again. The high-tech sector recovered thanks to a Meta platform shares, which jumped by 18.4%. Investors also welcomed positive quarterly reports of PayPal, Qualcomm, a deliverer of semiconductors and telecommunications. Nevertheless, even very optimistic earnings reports cannot eclipse macroeconomic problems. Some market leaders, for instance Alphabet or Boeing, unveiled disappointing quarterly results. The US dollar maintains its winning streak. It approached the 5-year high of 103.28 amid the weakening of the euro and the Bank of Japan's decision to stick to an ultra-soft stance. At the moment of preparing material for this video, the US dollar index rose to 130.30 versus its 6 main rivals. So it's highly likely to hit a 20-year high of 103.82 today, as the trading day has just kicked off. In the Asian session, it was moving in the price corridor of 102.98 and 103.70. The only cloud on the horizon is a GDP data for the first quarter, which is due today. Analysts believe that the indicator may decline considerably because of the record high of US trade deficit. The yen has remained an outsider for a long time. It's unable to start a long-term rise versus the greenback. The main reason is the Bank of Japan's ultra-loose monetary policy. As a result, the rate gap between the Fed and Bank of Japan is rapidly widening. The Japanese regulator is stubbornly going against the general trend of a monetary policy tightening. Yesterday, it kept its interest rate unchanged at 0.1% and the yield of 10-year government bonds at about 0%. The Bank of Japan did not provide comments on the monetary policy until yesterday. At its meeting, the watchdog made it clear that inflation surged outside Japan. For this reason, it decided to maintain its ultra-loose monetary policy. The yen dived down following such comments, and the psychologically important level of 130, which we discussed earlier, has already been broken. At the time of preparing material for this video, the dollar-yen pair was trading near 130.70. In the Asian session, it could continue to move in the upward channel of 128.32 and 130.75. Analysts reckon that the next target level will be 135, a high of 2002. In Australia, export prices have been growing for the 6th consecutive quarter at the fastest pace since the series began in 1975. According to the data published today, they jumped to 18.1% from 3.5% on a quarterly basis. The reading turned out to be 5 times higher than the previous one. At the same time, the import price index fell slightly to 5.1% from 5.8%. Export prices spiked mainly because of commodities such as coal, oil, gas, metals, fertilizers, as well as gold. Demand for gold as a safe haven asset is likely to remain high despite inflationary pressure and geopolitical uncertainty in Ukraine and Europe. How could it impact the Australian currency? Yesterday, the AUD USD pair gained 0.5%, touching a 0.7159. The pair went up after the release of inflation data. The report revealed that consumer prices in Australia surged at the fastest pace in 2 decades. And for this reason, some analysts are sure that the Reserve Bank of Australia will be forced to hike the rates already at the May meeting. Lockdowns in China, Australia's largest trading partner, also saw market sentiment in Australia. Today, the pair rose by 0.33%. It was trading at 0.7150 at the time of preparing material for this video. The Aussie maintains upward momentum despite bearish fundamental factors. In the Asian session, the AUD USD pair is consolidating in the price range of 0.7076 and 0.7164. The bullish trend is strong. And that's all for now. Subscribe to InstaForex TV channel and keep your finger on the pulse. Do not hesitate to ask questions down below. See you soon.